All right, traders, good day. Welcome back to the live room. Happy Wednesday to you. How's everyone doing today? Good morning, good afternoon. Hopefully, the microphone is on today, unlike yesterday's fiasco. But welcome. We'll go ahead and get started because I have a handful of pairs on my radar today, both for counter trend and trade continuation opportunities. So we'll get started. But as always, let's take a look at the economic calendar for today. You can see we have core retail sales coming out for Canada at 8:30. The big event for today is going to be the FOMC meeting minutes later today at 2 o'clock. So there's going to be the meeting minutes from, the meeting on May 1st or whatever the last meeting was. So that's going to be what to watch for in the market today. Of course, yesterday we had some surprise Brexit news come up. We had an announcement in the morning. We had Theresa May giving a presentation slash proposal slash Q&A later in the afternoon, and we saw a lot of spikes around the market. One of those spikes being on the euro pound, and we're going to start here. And the euro pound, it didn't do it the easy way, right? But it fulfilled the prediction that we thought would happen, right? If you guys remember yesterday, we were consolidating, we were putting in a rising channel, a little bit of loss of momentum on the higher time frames. We thought we'd see a pullback into previous structure. You can see the kind of the arrows and the lines still on your chart, and an extension higher. And again, it did it. Probably didn't do it in a tradable way. We talked yesterday about not trading during those events, but it just gives more confidence for you guys that are still kind of on the line between technicals and fundamentals. I always say that fundamentals can be the driver. They could be the ones that are actually, pushing the pedal on the car. But technicals are the destination. And if you can read the technicals, it will give you a pretty darn good idea on where price action is likely to go and how price action is likely to react at those levels. Now, how it gets there, it could be very, very slow, like we see in the markets this year. It could be very, very fast, like on this single candlestick wick. Fundamentals can certainly drive that. But at the end of the day, I truly believe that technicals are king. So we had a loss of momentum pattern. We're still on our daily candlestick streak, right? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13 in a row now. Lucky number 13. But we've pulled back. We had a loss of momentum pattern in the lower time frames. We pulled back in the structure. We've extended up, and now we are trading at previous structure resistance. So at this point in the market, I would have no intentions of getting long, right? Why would I not be interested in getting long at this point in the market? Yep, because price is trading at previous structure resistance, looking left. The location in which we projected price to potentially go to has been achieved, right? So there's really not a lot of room for continuation higher. Now, if you're someone that's not a counter trend trader, you're someone that doesn't trade support and resistance, what you would say to yourself at this point is, okay, I don't want to get long. I'm not looking to get long right now per se, but if price action were to break and close above, then I would look for another opportunity to get long, and that's that whole if then syntax, right? If price action breaks and closes above structure, it violates it. Once we have a higher close, we can then predict that price is likely to go higher. It's just you, Santosh. Try logging out and logging back in, perhaps. Is anyone else having a problem with charts? That maybe was too shy to mention it. But try logging out, logging back in. If that doesn't work, I can kind of reset things on my end. But try doing that first. Tim says that hello. Okay. Yeah, so try doing that, see if it works. If not, let me know, and I'll reset my whole deal. Yeah, okay. So at this point, you should be looking for opportunities to get short. So let's go down to the 240 chart, the 4-hour time frame, and you need to start asking yourself, okay, what do I need to happen at this level for us to get short, or for me to get short? Do I need RSI to go overbought? Do I need a double top, excuse me. Perfect, all good. Do I need RSI diversions? Do I need a pin bar? Do I need a doji? Do I need an engulfing candle? Whatever you need in this level as a counter trend trader, now you're starting to ask yourself, or hopefully just flip through your trading plan to the section that says support and resistance trader, and start identifying what you need to take the trade. After that, and it could be a little bit early right now, but you can start measuring out potential stops and targets. I think we can all agree that stops should go above the previous level of resistance. Would you guys agree? Over 88.40s. Probably the safest area you should put a stop loss above that level. Targets are typically a little bit more confusing because it really depends on the trader. There are different ways to take targets. A lot of it depending on if you're aggressive or conservative. The level that stands out for me, if I had to pick a level, a safe level for target projection, it will be this zone right here, right? The top of this zone would be about 87.89. The bottom of that zone would be about 87.71s for potential targets here on the pound yen. All right, let's go down to the hourly, and we'll go to the lower time frame. My charts are in weird places today because I did not save them yesterday, but let's see what it looks like on the hourly. And of course, we'll go down to the day trading time frames as well, because that's what we do here. Try to cover both day trading and swing trading opportunities. And again, here's that spike low, right? I don't think there's any realistic way. We did a thing yesterday about, reviewing trades and asking yourself how would you get involved. I don't think there would have been any way to get involved in this. Again, I don't think you should have been trading this. This was during the kind of the Theresa May press conference thing. But even in hindsight, I guess the only way I can think of is waiting for this higher high, higher close right here. But even at that, right, because your low is right down here, right, your risk is probably going to be, let's say what an ATR 10 pip stop would be 14. You're looking at a stop loss of about this. So unless you're really playing for that extension higher, probably just wouldn't have been a quality trading opportunity, even if you would have been able to catch it. Now, there is an inverse head and shoulders here. We're seeing that on a bigger spectrum from some pairs as well. If you guys look at this, inverse head and shoulders. So that is interesting. All right. So not much on the 60. I don't think we're going to see much going down to the lower time frames. Again, just you can see the price starting to lose momentum once again, right? Steeper slope, and then we're starting to trail off. So we could be setting up for that potential reversal soon. If you are a structure-based trader, should be on your radar. Any questions about euro pound? No, none. I did an excellent job, or I was so bad that you guys just ignored it. All right, let's go to pound dollar next. Let me try and get the timestamp in. This is going to be 9 minutes. Pound dollar next, if you guys don't mind. Who trades this pair? I don't. I tell you what though, it's not a bad pair. It just moves so slow. Yeah, that's the thing. Like, it's not a bad pair. When I say good and bad pairs, I'm selfishly speaking from pairs that work well with my personal style of trading. So good or bad is relative to me personally, because my trading is all that matters to me. So it's not a bad pair for me. It just moves so slow. So like, if you think about how we've said trading has been slow this year, This is like typically how the euro pound always is. So it's like, I got 2 opportunities a year. Yay. So it's got good movement. It's very turtle-like. It takes its time. All right, so pound dollar, again, I mentioned yesterday was an interesting day for the pound. We saw some big spikes in one direction at the optimism of Theresa May's magic plan, and then reality struck again, and apparently the magic plan was nothing different, and we saw some spikes up, and now we're back to normal business on the pound pair. So pound dollar here on the daily. Here's what we're doing right now, right? This was the previous level of structure we were looking at, about, what is that, 126.65s. We are currently trading below it. Now, again, bigger picture, daily close is what's going to matter most. But as a day trader, we got to take our shots when we see them. So the first thing I want to ask myself after I see what price action is currently doing is there room to move lower? What would you guys say? Can we move lower, or are we at the bottom? Started at the bottom, now I'm here. Good win, Drake. Good win yesterday, Toronto Raptors. We've got ourselves a series. We've got ourselves an NBA series. I wish the playoffs started earlier. I don't know why I guess Toronto's not really East, is it? Well, East-ish. More Midwest. They start so late. Stop starting these games at 8:30. Who cares about the ratings? I'm dying. Staying up till 11 o'clock watching this game. 11 o'clock is like 2 o'clock in the morning for me. I get tired at like 7. Yeah. Usually I wouldn't care. Like, I stopped watching Golden State and Portland after I realized it wasn't going to be anything. But this one, we had double overtime last game. I was like, oh man, this could be a good game. So, and I justify it by, I'm like, Akil, these moments only come once in a lifetime. There'll never be a moment like this again. You can sacrifice sleep. That's how I do it in my head. Anyway, yeah, we could go lower to $1.26. So there's room here, right? We're at 126.50s right now. There is room here as a day trader to get involved, right? So let's start working our way down to the 4 hour. Now, is this anyone's first week here in the live room? Maybe you were here yesterday, second day? If so, are you starting to adjust already, right? Do you see that my process is essentially the exact same thing every single day? Daily, 4 hour, 60, right? IPDE, right? Very mechanical in what I do. Very mechanical. I believe in a very simple formula, right? Consistent analysis plus consistent execution equals consistent results. So if I'm consistent in how I analyze the market, how I go through it, what I look for, all that fun stuff, and I'm consistent in how I execute my trades, meaning I take what I'm supposed to take. I don't skip trades or miss trades or take trades I'm not supposed to be in, then my results will be consistent as well. And as long as I've done my job with back testing and ensuring that what I'm trading actually has a positive expectancy, because you'd be surprised that some people are very consistent in their analysis, very consistent in their execution, but they're trading something that actually doesn't work. I know it sounds weird, but it's actually true. And they have consistent results. Those consistent results are just negative because what they're doing doesn't actually work. But I believe if I do those two things, my results will be consistent as well. And that's how I've been able to be a consistently profitable trader over the last many years. So yeah, hopefully you're catching on. But yeah, I've run into people where it's like they're great technicians, but what they're trading just doesn't work. And it's like, I don't know. I don't even know what to say to them. You're wasting this talent. You're wasting this talent of yours. But everyone's different. Then you have people that trade something that works perfectly, or have a strategy that works perfectly, but they can't execute it live because psychological issues sabotage themselves. So you get people on both sides. Got to find that nice mix in the middle. But not much on the 4 hours. So let's dig right down to the 60-minute here on the pound dollar. Again, you can see some of the madness from yesterday, the spike ups, the retracements. It gave us a nice little ebb and flow. Gave us a nice little structure shelf as well. Two levels. We have a low right here, which we kind of came back up and tested. We'll see this on a lower time frame. And then we also have a nice little level right here we can look for. So there are some levels in the market where if we get that pullback, we can look to take advantage of a trade. So again, I'm looking for shorts here. The concern is that we haven't broken that level in the daily, so we don't know for sure yet. But if we get an opportunity, we can certainly take advantage of it. And there's two things I can see here. One, we pull back in the structure. We continue extending down. I think the overall bias for the pound is bearish already. So you're just even from a fundamental standpoint, I should say. So if you're on the bearish side, you're on the right side. But if for some reason we're going to start to see a reversal, again, this can be a head and shoulders pattern that forms with a break and close above that. So if you're someone that's looking to get long, maybe play the reversal. That's something to look for as well. As far as a true reversal, I wouldn't be 127.20 is the minor level. Even that is iffy. I don't really see a lot of reasons to look to get long here on the pound. But we go down one more time frame to the 5 minute. You can see that first level of structure, that shelf looks a lot clearer here, right? A lot smoother here on the 5 minute. A nice range between 126.61s and 126.80s. And then if we go down to my favorite time frame, the range bar charts, our favorite chart. The range bar charts, again, it just gives us a nice little condensed version of that move. So if you're looking for longs here, shorts on the pound dollar, wait for a pullback trade, right? 126.60s looks to be a key level. And we should be able to stay below 126.80s. So this ends up being the chopping zone, the kill zone, right? Now we see that market is coming off of a what type of move here? What do we do when we, wrong button? Wrong lever. What do we do when we got down here? Yep, George is already on in my brain. Yep. We went oversold. George already said it before. He said one or two more candles, we may get that RSI swap. And what that RSI swap is, again, when our RSI goes from directly overbought to oversold, or in this case, oversold to overbought. I'm not brilliant with names at all, so I just called it the RSI swap because that's the first thing that popped into my head when I started noticing it. And again, it was something for you guys to know the backstory. It's a tool that I use in my trading. It was something that I do a lot of strategy development stuff. And let me ask you guys this. How many of you guys have ever tried to develop your own trading strategy? And again, by your own, it doesn't mean like no one's ever done it, but just like developed one from scratch instead of just being like, I'm going to trade Gartley's, right? How many times have you failed? Charlie says every time. Not all the time, Akil. Every time. Yeah. So I failed a lot too, and that's normal, Charlie. That's normal. There's this. I think people assume that the simplest things work, right? And I was contacted the other day on Facebook, a guy that was trading moving average crosses and this and that, and people think it's so simple. It's so simple until you actually try to put it into play, and you realize that you're like, oh man, this doesn't really work. So I consistently fail at creating strategies, right? All the time. There's no shame in it. It's experimentation. It's me seeing something like, hey, I wonder if this would work. And then I put it to test and I'm like, okay, it doesn't work. But I typically learn something from it, right? I've played around this winter. I played around with Keltner channels because I've done Bollinger Bands before. Keltner channels were a little bit more my speed because they're kind of more momentum based with what I already use in the RSI. And I didn't find anything that worked, but let me mute the phone real quick instead of vibrate. I didn't find anything that worked, but I learned a lot about them. And while I was doing some testing on the stochastics, trying to find a simple strategy, I was looking for, hey, maybe I can just make an indicator only strategy. We can automate it and it can give, a different type of feel to what we're doing here at Tier 1 Trading. And it didn't work. But I observed that RSI swap, or that stochastic swap at the time, and it seemed to be pretty powerful. And then I just went on and said, hey, what if I use this with what I'm already doing? So there's always some benefit. Well, most of the time there's benefit in testing. And, when you find out what doesn't work, you typically learn something. So yeah, I like the RSI swap. We'll see if we can get back up into that area. Again, this is not your best trend continuation opportunity because we haven't technically violated that level on the higher time frames. But there is room to the downside. So it's definitely one that's worth your shot. And if we take a look at this from a risk reward perspective, right? Again, I don't know where we're going to get involved. So let's just say right in the middle of this zone, right? We know that stop should be above where? Where? Above structure, right? And again, this is going fast, guys. Don't worry. I don't want you guys getting information overload. Just keep coming in each and every day, and I've got a few traders mentioned this earlier. You'll get adjusted really, really quickly, or you'll adapt really, really quickly to the live room. But yeah, let's just say we're putting stops up here. 126.83, 93. Let's even say you want to be above the 127 even handle, just because you want it to be really, really, really safe, right? What level did we talk about on the higher time frame, right? Remember that higher time frame prediction, which maybe seemed pointless at the time, but now is going to prove to be very, very important. Where do we talk about price action going to? Who remembers the number? Yeah, 126 even. So you set yourself up in a situation like this. You want to be a little bit above it, obviously. You set yourself up where you're a little bit like this, and we can even make it even more extreme risk reward. That's probably too much of a reach. But you still have room to increase your risk and still be safe. But the point is, you put yourself in a situation where you have a risk reward that now looks like this. And again, you don't have to be this aggressive, obviously. You can take chunks off on the way down. But 83, 93 is going to be more realistic. You put yourself in this situation and you ask yourself, how many times do I have to be right versus being wrong? And hopefully it takes some of the fear away, because we don't want to fear being wrong. Many of us make mistakes because we fear being wrong, right? If we know in this situation that I can lose 2.5 times, I can lose 2.5 times and only need to win once to cover it, that should actually give us confidence, should it not? Especially if you know your win rate. Right? Here's a good example, right? So I know my win rate. Right? I know my win rate. I am typically a 55% trader. But let's even take the lowest that I go, which is about 40%. Hope I didn't jinx myself. The lowest I go is about 40% typically when things are going bad. So if I know at my worst I'm a 40% trader, right? That means I'm going to win 4 out of every 10 trades, right? So take this risk reward and measure out what 6 losses look like. 1, 2, 3, 4, 5, 6, right? Measure out 6 losses and ask yourself, would 4 wins cover for that? 1, 2, we don't need to go on any further. So if you're consistently taking opportunities like this, you know that even at your worst, guess what? Should you still be profitable? Of course, yes. Yes. Now again, is this risk reward going to be the same for everyone? No. right? This is based on a true trend following type of strategy. Many of you guys are going to be taking stops or taking targets in between different places like that. But obviously, you just do the same type of deal per how you're trading. But you got to have confidence. Once you, and a lot of it won't come until you know yourself, until you're very comfortable in your trading skin and you know what you can do. But once you have that confidence to just take the trade, and once you can put yourself in a situation where you really have the risk reward in your favor and you no longer fear losing, it opens up a massive amount of freedom. A massive amount of freedom. It's no different than a professional athlete that's playing loose versus playing tight, right? We see this we're just talking about the NBA playoffs, right? NBA playoffs, they always say that a lot of the bench players play better at home versus on the road. On the road, they're a little bit more nervous. Maybe it's their first time in the playoffs. They're younger guys, and they start overthinking. They get tight, and they start missing all their shots and making turnovers and doing all the bad stuff they're not supposed to do. At home, it's a little bit more comfortable. You know, you're here the majority of the year. The fans are not booing you. They're cheering you. You play a little looser, and you typically perform better because of that confidence. So you just want to trade free. Trade free. All right. Any questions on the cable, the pound dollar? We got a lot of pound pairs that are in play today. Let me cross this out. Pound dollar. Well. Euro pound. Well. Let me know if you have questions on the pound dollar, and we'll move on to our next pair. Not underline the keel. Strike through. All right. Let's go. We really do have a lot of these, man. Let's go New Zealand, Canada. Just to give you an idea, my watch list this morning was pound dollar, pound yen, dollar yen, New Zealand dollar, Aussie Canada, Aussie pound, Euro pound, Canada yen, Aussie New Zealand Canada, pound Canada, oil. But we'll go to New Zealand Canada next because this is one that we've been following. I know Latch has been, if I remember correctly, been destroying this pair, but on the demo, which I still count. I don't really care if it's demo or live. I just care about the process. So I'm still giving Latch credit, even if he doesn't want to give himself credit. By the way, new YouTube video out for Latch. Check it out. Hit that like button, share it, subscribe. New Zealand, Canada on the daily. Obvious trend continuation situation. And we're trying to figure out, as the great Ludacris once said, how low can you go? How low can you go? And we can definitely go lower to about, we're at 87 flat right now. So we're running into a psychological number right now. We can technically go a little bit lower than this. But we're probably at the end of the move. Now this is minor structure. We mentioned this yesterday. This is minor structure. I think the smaller level we can go to is 86 flat. So if you think about this minor level of structure, this is kind of like a hiccup. I interpret this as being like, if I'm cautious, we could stop here. I don't necessarily predict the market to stop here, but we could. I'd have much more confidence in the market really halting above 80 or at around 86s or even 85s. Those are too much stronger levels in my opinion. So there still is room to the downside, but keep in mind we are at that psychological number here. And again, this is going to be another day trading pair just because this thing is, a lot of these pairs have been like, they just been runaways. So they haven't been providing a lot of great pullbacks on the higher time frames. So that's why we're looking a lot on the lower time frames. It's funny, when the year started, we didn't do any work on the lower time frames at all. And now we're kind of doing like all of our work on the lower time frame. So it's an interesting switch. George said, I got pound dollar for a demo short. Short euro dollar, FTB. Long Aussie dollar, cipher. You got three thrust there, George. 3 thrust. Let's stop before that becomes inappropriate. All right, let's go down to the 60-minute here on New Zealand, Canada. Let's find my 60-minute chart. Here we go. Yeah. Yeah, that was the one where they're making. George says, "Have you seen the Key and Peele skit on 3 thrusts?" Yeah, because of the NFL rules. Our silly NFL. I think they. I don't know. Well, no, I think they still have it. The silly NFL, right? The NFL used to be called the No Fun League because they tried to implement like no one can celebrate and stuff like that. You can't have fun when you score. So they started loosening up on the rules, and they're making rules for how you can celebrate, right? How you can have emotional outbursts, and you can thrust, right? You can pelvic thrust, but once you get to 3, right? Once you get to 3, it's inappropriate. 2 is fine. You can thrust 2 times, but if you thrust the third, that flag's coming out and your team is penalized. So it was a great skit where they were thrusting and they'd like pause and it'd be like flag. Good old No Fun League, man. Let the players have emotions. I hate that. Any of you guys baseball fans out there? I know baseball's a boring, dying sport, but anybody baseball fans? Reds. I'm sorry, Adam. I'm sorry. I shouldn't talk. I'm the Phillies. We just broke the bank on a player that sucks right now. But you guys ever watch like Korean baseball or like Japanese baseball? Basically any other type of baseball aside from American baseball? Right? We are the only baseball league that's not having fun. Right? For you guys that are not familiar with baseball, if you show any type of emotion, like if you hit a home run, which is like one of the best things you can do, you hit a home run. If you flip the bat the wrong way, the other team gets offended and then they throw a ball 100 miles per hour at your back. Right? So if you do something good and you get happy over it, you get hit with a pitch. Or one of your friends get hit with a pitch. So everyone lives in fear, right? Over in like Korea and Japan and even like Mexico, where it's like they're having this is why baseball's so much boring, because someone hits a home run and it's like, yay, right? We like seeing emotional outbursts, right? One of the reasons people like Tiger Woods, right? And by the way, my dad shared with me a great book on Tiger Woods where like he can really be a serial killer if he wasn't a golfer. The way he was damaged so badly as a kid growing up. But that's another story. But I'm glad he went to golf and not serial killing. But one of the reasons we like Tiger Woods is because what happens after Tiger Woods hits that big putt? Does he just sit there and clap? No, he does a little fist pump and gets hype a little bit, right? We like that. We like seeing that, right? I like seeing basketball players, dunk on someone and just stare at them and flex. We like seeing soccer players. I remember it was, what was the guy? The Italian Baratelli, right? He hit this rocket goal. And he just stood there and just like flexed his quad muscle, like rolled up his shorts, just flexed his quad muscle, or like took his shirt off and just flexed. We love stuff like that. So in like the Korean and the Japanese and Mexican baseball leagues, when they hit home runs, they have fun. They flip the bat, they run backwards, they do like a backflip to score, and it makes the game exciting. Here in America, you properly trot around the bases out of fear that a ball may be coming at your head 100 miles per hour the next time you're at bat if you show too much emotion. But listen, if you go too fast, it's showing up the pitcher. But if you go too slow, it's also showing up the pitcher. So you have to trot around the bases, right, with zero expression on at the perfect pace, or else you're going to be thrown at. It's ridiculous, man. It's ridiculous. Like I want to see someone hit a home run, rip their shirt off, and just run around the base, pumping the fans up. I'd watch a lot more baseball. I'd watch a lot more baseball. It's the old guard. It's gonna change. It's gonna change as more younger people get in. It's gonna change, but it's gonna be 2 generations down the line. But it's gonna change. But like stuff like that's fun. Like the bat flip. If you ever watch some highlights of like Korean baseball, right? These guys are doing like ridiculous things. Like one guy he hit a home run. He just stood there and posed for like 5 minutes before running the bases, and it's exciting. And the pitcher should be able to do the same thing too. If I'm a pitcher and I strike someone out, like I just hold the pose. Like it should be, have fun, right? It's not like you're not taunting the other person, not yelling at their face, but I'm all about having fun, right? I want to see touchdowns in the NFL because I want to see celebrations. You earned it. You hit a home run, you deserve it, right? And if you don't like them doing it, don't let them hit a home run off you, right? That was always me when I played basketball, right? If I didn't want to be talked crap to, right, I shouldn't have let him score. If I let him score, he deserves to talk all the crap he wants to me. But we're backwards here in America. No one wants to have fun, and that's why the sport is dying. So New Zealand, Canada, lower time frame. Continuing on here again. Most of our work is going to come on the range bar chart. So let's just kind of skip down there past the 15 and the 5 and look at a clear view of this range bar chart. Dollar yen, by the way, the pair we were looking at yesterday, this is retracing back, so we may be getting that trend continuation opportunity coming up as well. Yeah, I'm here for the taunting, man. I'm here for the taunting. I mean, not like bad taunting. I should just call it the celebrating, right? All right, so New Zealand, Canada, similar situation as pound dollar. Pound dollar actually looks a lot better. But same premise here. You can see the market clearly making extensions and pullbacks, extensions and pullbacks. Same old, right? Wait for that pullback. See if you can catch that next extension down. Again, we are at a tricky level, that 87 flat. What may be even safer is to look for the next extension. So wait to see if we violate this level first, this 87 flat level. And then look for that next pullback up just to give yourself a little bit more safety here. All right, let's go to New Zealand, Canada. Strikeout. Let's go to dollar yen next. Dollar yen. Following up on yesterday's conversation. 37 minutes. Trying to keep up with this timestamp thing here, guys. I think if I can do it for 2 weeks, it'll become a habit. If not, we're done forever. By the way, how many of you guys took that survey yesterday? Adam Grimes survey? Thank you. Thank you. Appreciate it. Or today. Or yeah. Hey, Adam. Nice. Yeah. Yeah, I appreciate it. He really values your feedback. So I appreciate it. It's quick. I mean, it took me, I think, like 5 minutes if you don't overthink it. If you overthink it, it may take you 5 hours, but like any test, go for your gut. Go with what you first see. Don't overthink it and try to answer what you think he wants you to answer. That's typically when people get into trouble. They're like, I think it's this, but I think he'll think that I think it this, so it might be that. But he'll probably think that I'm thinking it's that because I thought it was this, and he wants to think that I thought it was this, so now it's this. And it's like, just pick one. There's only 2 options. Pick one. Last year, I was looking long this morning at this level and should see what happens. Nice. All right, let's go to dollar yen on the daily. Daily. Again, as more people come into the room, wow, we started with 10, now we're at 31. Fashionably late, as always. Welcome to the room. As always, this is recorded, so you can go back and view the recording later if you missed it. And conveniently, I've been adding timestamps, so now you can know exactly at what minute mark, vaguely, we look at each pair. Yeah, so I started doing it this morning at 7 a.m. and still doing it now. Gosh, you're overthinking it. Just close your eyes and pick one. Close your eyes and pick one. By the way, hold on real quick. Speaking of that. Pound dollar did not quite get to that level of structure, so we may be starting a reversal here. I want to see if we can push up a little bit further. But here's a look at the pound dollar. We did get a pullback. We didn't quite get to our lows here. So let's see if we can make one more up thrust instead of getting a lower low, lower close. Perhaps a complex pullback, perhaps even an advanced pattern formation. But I'd like to see a move into that kill zone. We're just shy. We are at the 50% retracement though. But we're just shy of that pullback. So hopefully we'll be patient enough and get a move up there. We'll see though. I know Ale. All right, so dollar yen, beautiful V bottom, right? Beautiful V bottom, which essentially means we formed a V, right? We came down, We did not play around here in the daily, and we came back up. As we go down to the lower time frames, we can remind you of the reversal pattern that we've been seeing here. All right, did that make sense, guys, when we talked about this? Just the rotation and how we went from, you see, lower lows, lower lows, lower lows, higher lows, higher lows, higher lows. Does that actually make sense? I meant to ask that after the video, but it was the weekend, and I get as far away from my computer as possible. But did that concept on spotting early reversals make sense? Okay, perfect, yeah. Adam says, yes, I noticed it on my own before you mentioned it, but yeah, you're right. All right, so now welcome. I did my introduction spiel yesterday, so I'm not going to do it again. I have a rule that says I can only do my introduction once a week because I'm bad at introductions, but welcome to the room. Ooh, you can go back and watch yesterday's recording and get the introduction that way. But we're waiting for a pullback here, and we're starting to get it. So this is the first level we can come to, about 110.30s. A nice level as well would be right in here between 110.27s and about 110 evens. So there is still room for us to push higher. Again, we talked about coming right up to this gap, right below the 111 even handle. Right now we're trading at 110.34s. Again, if we come down to that 110.20 level, plenty of room to go higher. So looking for a pullback here, waiting on the pullback to continue here, and looking for opportunities to get long dollar yen. So let's head down to a 60-minute chart. Let's even put it on TradingView. Yeah, UK version, right? There we go. There you go. There you go. Now again, you can, if you do the US version at first, you'll still get that same momentum. It's only once that momentum dries up, then you got to switch to the English UK version. Yeah, so do that first. You'll get a lot of new momentum. Encourage people to share it. You're not on Twitter, are you, Latch? I'll say get TradingView to tweet it at you. Get those likes up. All right. So let's keep an eye on dollar yen. See if we can push down into this zone, and that's the zone I want to see. We are getting close to that RSI. Well, we could potentially be putting in an RSI swap as well, right? Price action came up. Started to bend off here, loss of momentum. And now we're putting in complex pullbacks to the downside. So we'll see if we can get into this area. I'll be looking for a trade entry in there, looking to trade it up to retest previous structure highs, and then look for an extension to that 111 even handle. So still a good trading opportunity on the radar here. Just got to wait and be patient. Pound dollar did put in that lower low, lower close for any takers. Any takers on the pound dollar did put in that lower low, lower close. We did hit a 50% retracement as well on that level. So we could, if we do retrace back, or if we do extend back up, we could have a complex pullback. Obviously, we can also end up having a bat pattern, and a bat pattern would give us or give me an aggressive entry. Last says you got 3 fibs in that kill zone as well. If we draw out extensions and retracements, right? We can see a cluster of Fibonacci. Oh, not that one. Let's take the most recent leg here, swing high to swing low. And we can probably take a smaller retracement as well, or bigger retracement, excuse me. But you can see 1618 and 786 lining up. Zoop. And a little bit higher. You're going to see 50% a little bit above that zone. So a little bit of Fibonacci confluence in that zone. Again, 110.20s. You've got a 1618 and a 786. Let me just do one more from this entire move. That's not going to be a 3D2. Nope. Yeah, so a little bit of Fibonacci confluence in there as well on the dollar yen. Let's just take one more look at it on the lower time frame, the range bar chart. Very similar situation as the 15, almost identical. Any questions on dollar yen? Nope. All right, let's do one more before we take our break. We do have Canadian news coming out at 8:30. Keep an eye on that. Any pair in particular you guys want to do next? I've got a bunch on my radar still. I got pound yen, New Zealand dollar, Aussie, Canada, pound, Aussie. The beast. Charlie wants the beast. You want the beast, and this is what you get, Charlie. This is what you get. Let's head over to the pound yen, aka the beast. Me and my buddies used to call it the graveyard, but that wasn't the most positive nickname, so I like the beast a lot better. Why did we call it the graveyard? Because it used to bury us every single night. Well, used to bury him every single night, but he was part of this group called the Vampire Trading Group. I wasn't a part of the Vampire Trading Group because it seemed too much like a cult to me. Yeah, vampire traders, man, it was weird. It's so, I'm glad I wasn't a part of it, but it makes for a very amateurish story. Where it's like, yeah, we all had this group, and this group was only up at, the group started at midnight and went to like 4 o'clock, and I'm like, all right, you guys bite each other's necks too? Yeah, seem professional. I mean, it made sense, I guess. I mean, they were trading. Excuse me. I guess not. It wouldn't even be the London Open. But yeah, I mean, I guess they call themselves the Vampires because they're up late at night. So I don't know. I don't know if they actually made money or not. I didn't. I was fast asleep. But my best friend, the person that introduced me into trading, the Vampire Trading Group. All right. So here's what I'm looking for in pound yen. I want to see a violation of this level. As we go down to the lower time frames, you'll see that we spiked up and then we hammered right back down, and we're retesting those previous structural lows. I think if we break past those previous structural lows, we're going to see a pop. Skiddity pop, pop, pop. Man don't dance, right? We're going to see a pop, and we can see a pop down to 138s. You guys know him? They call me Big Shock. Anybody? No? No? Yeah. My wife loves that song. 2 + 2 is 4. I like my eggs no toast. I like my eggs with toast. Quick mouth. I like my eggs with yolk. Please don't burn my toast. Ale says I was looking at 137.50s. 137.50s. Yep, not a bad level as well. Yep, basically the same level. The pound ATR is so big on this pair. 138 and 137.50s. Yep. Same level if you look left. These lows right in here. Yep, so we can definitely continue lower here. Let's get down to the 240. You can see kind of the smash right here, right? We come down here, we test it, we get some Brexit news, we get some more Brexit news, smashed right down into that level. Again, if we can break past this level, I think we're going to see a breakout trade. Now, the hope is that we actually get a chance to trade it. Just that divergence isn't looking too good. I I don't think it means anything at all. Yeah, divergence doesn't affect me at all. You know what? You know what I care about? Breaking that level. Yep. So no, I don't think there's any need to get scared of the diversion. Not saying that you're scared, but in general, people start creating reasons. Just wait for price to tell you what it's doing first and foremost. And look at your indicator secondly. Now, if you're someone that's considering getting long at this level, then you would take that divergence into account. So if you're looking to get long here, now you're looking at divergence. You're saying, okay, this can play a role. But if you're only looking to get short, then this divergence it shouldn't mean anything. It should just be ignored. So it really depends on what side of the trade you're on. By the way, so again, keep looking at. We're gonna pound dollar real quick. We are getting that potential complex pullback. We're gonna have a potential bat here at our 886. That's going to be an aggressive short for me. It might be 127. Get over here. Yeah, no, I'm not saying. I'm just saying make sure it doesn't influence your trading. That's all I'm making sure. Make sure you're not, because we have a habit of traders to really create reasons not to trade, and that can be a good thing. You do want to look for reasons not to trade, but we don't want to create something that isn't really real. So we don't want to look at divergence and then like look at it more, and then use that as an excuse not to involve yourself in the trade. We don't want to give it more power. Yeah, we don't want to give it more power than it needs to have. New Zealand, Canada popping up. That's another one we can take a look at. Yep. Yeah. So I'm not saying you're doing it, but I'll have traders that will see this. They'll want to get short, and they'll be like, "Ooh, but it's divergence. Maybe I should get long. And then they end up getting long, and then the market breaks below it, and they're like, "Oh no, I was supposed to be short." So yeah, there is divergence. Again, right now it won't. If we break and close below, and that's the signal that we would need to get short. If we break and close below, then that divergence would mean nothing. But we have to break and close below first. So that's what I'm waiting for here on pound yen. Break and close below. I think I think we would see a big pop, right? Big pop down to that level. The question is, how is there a way to get involved? This is one where this would be tough. If you're a breakout trader, if you're a true breakout trader, this is one where you put a sell stop right here, and you say, man, if this roller coaster takes off, I want in. Now again, what's the downside of being that aggressive with your entry? And I'm not a breakout trader. I've told you before, this is something that I can see myself getting into, adding this method. That's probably the next thing that's going to be added to my arsenal down the road. But yeah, the false breakout. So of course, the thing is you go here and then it pops back up and now you're screwed. But there's pros and cons of everything, right? There's also on the pro side, if the market just smashes right down, guess who's involved? Yeah, that person. And there are other ways to do it. One is you can wait for the break and close, right? And then put your sell stop below it afterwards. Now you have confirmation of the break and close below, which gives you more information. You can still have a false breakout. Obviously, a false breakout can come anywhere. But then also, if you do get that clean break, you never got involved because you're waiting for that break and close. So it's like life, man. There's pros and cons to everything. It's all about measuring it out and just, finding the best fit. How would you play stops for a breakout? I do it above the candle. If I'm waiting for the break and close below, stops will go above that candle. Now the interesting part is this: if I'm doing a straight break, I'd have to do the previous candle. So if I'm not waiting for the break and close, if I'm just doing a straight break, stops would have to go above the previous candle. So you can't. Well, let's just say this is the candle right now forming. Yep, sir. Here. right? So stops would go above this previous red candle like that. Ale says ATR, probably a little bit smaller than the ATR. I'd probably go with like a 5 or 10. I'd want really tight stops. The problem with the ATR is, and this pair is gonna be a little bit different because the ATR is so big, but the problem is the ATR is it stretches you out so much. So, if I just do a 5 pip stop, 139.96, that's right above this candle. Again, ideally, right? If this is a true, here's the premise behind it, right? If this is a true breakout, we should never come close to this level, right? If this is a true breakout, we should never come close to the previous high of the high of the previous candle, right? Yeah. So I don't want to have stops. They're already far enough as they are because we're selling so low instead of on a pullback. So I don't want to necessarily have stops, or excuse me, yeah, stops lost like that. I don't want to have stops too far away. We do something like an ATR 23. Now I'm looking at all the way up here. So again, it doesn't look that much on a pound yen chart because the ATR is so big, but we want to know where we're wrong. So just like I teach it in the head and shoulders, I put it right below the previous candle. But we should, ideally, we should never come back and test that level. But that's, we'll see. My opinion may change when I actually start trading like this. We'll see. Maybe the ATR offers a benefit that the other version doesn't. Also from a philosophical standpoint, I don't necessarily believe in set number stops. So I may do something, it may be ATR based, but it may be like half ATR, right? Typically I'm 1 to 2 ATR. Maybe I do half ATR because I still want to have it dynamic. So I highly doubt I would do like 5 pips, 10 pips, something like that. But either way, it needs to be, it will be very close to that previous candle. But that's the more difficult part about trading that style instead of like a counter trend trading style. When you're selling into a rising market, very easy to have tight stops. When you're selling into a falling market, much wider stops. So interesting stuff. And yeah, in this case, yeah, if I would always adjust, like Ale said, I would always adjust to the even handle number in this specific case. So let's keep an eye on pound yen here. Waiting to see if there's a break at this level. You could look to buy here. I know I've been talking sell the entire time, but you can look to buy here. This is really no different than like a 26.18 trade. So if you see a reason to buy, there's nothing wrong with buying here. There's nothing wrong with buying here. Now, I would tell you this. I know we're viewing this as technicals. Because I saw this live, I know what this is. I view this market as being more like this than like this. Right? And it's only because I know what this is. Does that make sense? I know why I was watching that move live. I know exactly why that move happened. Yeah. So can I discount it? There goes New Zealand, Canada. Can I discount it on my technical analysis? No. But I know exactly why it is. Down goes Canada. All right, so we've broken that 87 just to flip back to New Zealand, Canada. We've broken past that 87 even handle. Now you can start looking. Now it's the CPI news. See if there's a follow through from that though. Last says, so when it's a news move, if it's not convincing for you to look, and so if there's we're gonna take a break soon, I promise. After this, so when it's a news move, it's not as convincing for you to look for a retest or whatever. What do you mean by look for a retest? Like a bullish trade here? No, I just have no interest in a bullish trade here. No. Overall, in my analysis, I see no reason for the market. My analysis shows no reason for me to believe that the market is likely to continue higher versus lower. So in general, I'm not looking for anything long, just in general from my top-down analysis. Now, when you see a move like this, right, in a normal situation, right, you can look at this as, hey, the market was channeling, we came up, basically a 26-18 opportunity, right? And that would be a legit way of looking at it. However, because I know what this was, right? Because I know that this was an impulsive, fear-based move, right? This was a news event came out about Brexit, and everyone got positive about Theresa May. And then Theresa May opened her mouth, and everyone got negative again, right? I know that this is essentially the same as a false breakout. This was an emotional move in the market that was 100% retraced. So essentially it was nothing. It was kind of like a news spike where like the non-farms, where it goes up, it goes down, and then it goes right back to where it was trading before. So it loses the power. So I wouldn't be interested in buying here. And again, my overall analysis, I'm not interested in buying, but for this specific pattern formation, the break above that channel and the retest to it, I would have zero interest in buying because I know what created this move. It was simply a short-term emotional based move based off Brexit. All right, let's go down to the 15. Yep. And that's just experience. I mean, that's just experience in reading the market. That's part of the art, if you could say. Go down to the 15. Again, if you can find reasons to buy. I like the fact that we're consolidating near the lows, right? You guys know how I feel about this. Consolidation near the lows or near the breakout points of potential patterns just gives me even more reason to think that we're going to break out to the downside. So I'm full on this bearish break. Mark my words. And of course, once I said that, as soon as I said that, mark my words, I expected the market to break to the upside. Mark my words, we're getting bearish. Boom, 100 pip candle to the upside. Damn it. Damn it. But that's what I would expect here. So, any questions on pound yen? And again, here's the little New Zealand candle that's happening. Again, didn't find any reason on the range bar charts, but you can see pullback extension. It's news based, but it's still pullback extension. All right, let's take our break so Tony can get some tea. And I'll see you guys when we return. We got a lot more to go through, so yeah, get ready. All right, traders, back for round 2. Just got short pound dollar. Give me a second to close my door. There we go. Just got short pound dollar. If you guys remember, we're looking for a trend continuation trade on this pair. Looking for a complex pullback. We're also looking for a bat pattern. Hey, George. Now, the bat pattern never filled, right? The bat pattern was up at 126.73 where I had my aggressive orders on. However, we did get a lower low, lower close off the complex pullback, right? So again, here's that complex pullback, basically an AB equals CD pattern. And I just added another chart to my chart. How do I get rid of that? Data series. Let's get rid of you. And there we go. Here's your complex pullback. Again, copy and paste, AB equals CD move. You guys want some Fibonacci confluence. We're going to have a fib up there as well. And we got our lower low, lower close. So entered at market after the lower low, lower close, looking to get short, or am short. Again, we're looking down towards that 126 level. If you're looking for a more conservative target area for, say, an initial target, there's some Fibonacci. You can't see it because I got to change these colors on the gray chart. But there's a 127 extension down at 126.31. There's a 1618 down at 126.20s as well. So you can keep those two levels in mind. So second trade of the week for me, and we'll see how it goes. All right, so let's get started again. Lat says euro pound. So let's recap the euro pound as well. That was another one we looked at a previous level of major structure. If you guys are just coming in, by the way, we looked at euro pound, pound dollar, New Zealand, Canada, dollar yen, and the beast, the pound yen. So just to recap, euro pound still up in that previous level of resistance here. All right, let's go to, I've got pound Canada TCT. Let's just finish up on our trend continuation trade since we've been talking about a lot of them already with the pound pairs, and then we'll go to some other stuff. No need to. Yeah, nothing wrong for a reminder latch. Again, we have people tend to come into the room late. Nobody likes to be on time, so we typically start off with like 10 people in the room, and then by the time I look up, the next time I look at the deal, it's like 30. So George says, hint, hint. I get it, George. I understand how it goes. I got the second session of the day. Everyone's already gone through the London session, right? I understand. Greystone's the more popular one. Then just gotta, you come into my room just for pity, so I don't feel bad. I get it. It's okay. I understand. It's all good. Pound Canada. George's like, good, as long as you know. Now we don't have to stop lying. What I do, Akil, is I just sign into the live room and then I don't actually watch it, but figure it makes you look good. It says I cut work short to attend your room as much as possible, Coach. I know, I love it. Again, and these things are recorded, so you guys can always catch them at your leisure. If I get fired, at least I did it for good reason. Hey, it may be a blessing in disguise. Maybe a blessing in disguise. Pound Canada. All right. This one's actually not as interesting as I thought. Originally, I was looking for trend continuation trade. It's not a pair in my portfolio, so I did a really brief look at it this morning. And I basically saw that we've massively smashed through the 170 even handle. And the Canada news has helped us. However, the more I look at this, the less confident I am in where we're going to go, mainly because of the size of these wicks, right? The initial level that I was looking at was we can come down here to about $1.68, right? This level down here. But we are within the realm of reversal because of that long wicked candle right there. So it is still a trend continuation opportunity. Don't get me wrong. But again, it's not as the target projection isn't as clear as what I initially thought. Just curious right now. When do we switch here with the stochastics? I don't even think I have it modified the way I want them yet. Here's our curve. There's our close. All right, boom. Sorry, just doing a little personal work here. Here's our hook. There's our break. And then that continuation up. Perfect. All right, let's go down to the 240. All those squiggly wigglies at the bottom of my chart. 240 chart, again, you can see bearish move. Again, we had, I'm assuming, some positive CPI news from Canada this morning. Now, as we go down to the lower time frames, that long wicked candle I showed you on the daily presents us with a different story. And this is why I had a different level this morning, because I was looking at the 4 hour, not the daily. But that long wicked candle is actually two candles, right? So very similar to what we saw with the pound yen, right? I would assume this is news based. Now, why would you assume that this is a news based candle right here, or a candlestick combination? Yeah, because it's an instant pullback, right? So it's a move here, and then it's a move right back up. And if you want, you can go back and look at January 15th to see what happened at January 15th. Could be Brexit news, could be something that was scheduled. A lot of the time, if you look at the time of these candles, they'll tell you this is 1 o'clock. So it could be a Bank of Canada interest rate deal. But yeah, at least it gives you a little bit of a lower aiming point. So 69 flat is a level that could be tested or right before that level. So just like our other pairs, right? The 60 is going to give us, or you can look for a pullback on the 4 hour. Obviously, we need to see that start happening first and foremost. I forgot to say when we were starting. 105 maybe. 60-minute chart. Look for that pullback. Right? Price comes down. Price comes up. Price comes right down to this level again and holds. Is that a positive or a negative sign as far as structure goes? That's a very positive sign. Yeah. If price were to come to this level again, boom. That's an ideal level to look for a hold. Why? Because price has held there before. You may even want to shoot a little bit lower, $1.70 even. Yes, that's an excellent place to look for a pullback too. And that's the tough part about trading. You got to be patient. You have to be patient enough to wait for the market to pull back, then try to jump aboard. But that's definitely a good level. 170, 170 20s. Definitely a good level to look for. Now, if you're a lower time frame trader, again, if you want to go down to the range bar charts, you may get some closer levels. But from a higher time frame perspective, I think that 170 level is a great level to keep an eye on. Is this the same pair, right? Am I looking at the right thing? Pound Canada. It looks awkward on the range bar charts. Doesn't it look awkward? Yeah. So yeah, looks like the minute chart's going to give a much better look than the range bar charts here. Just going around different ranges to see if it makes it look any different. And yeah, the minute based charts look a little bit different. But this is going to be your zone right here. Take care. Don't get fired. If you do get fired, don't mention my name. Rule number 1, don't get fired. Rule number 2, don't mention my name. You never saw me. I was listening to I forgot who it was. Some celebrity there's this taxi cab driver or Uber driver or something that drives around all these celebrities in New York. And I forgot what celebrity he was talking to, but he asked the celebrity if he can take a picture. And the celebrity was like, yeah, under 2 conditions. He said, condition number 1, you can only post it a week from today. Condition number 2, we've never met. And the guy was like, what? And then the celebrity just walked out and left. Rule number 1, don't get fired. Rule number 2, if you do get fired, do not mention my name. Let's go to New Zealand dollar. Let me just check real quick on dollar yen. Come on, you just stopped dollar yen? You stopped? Dollar yen's putting in a nice test candle here. We'll go back to the 60 real quick. Dollar yen. Again, 2 zones here. You have a smaller zone down here. Your first level of structure is right here. We're testing this candle pretty well, probing it. So you can be on the lookout if we continue and end with we have 2 minutes. We end on a bar like that. Higher high, higher close could be a first chance entry here at getting involved in dollar yen. All right, let's go New Zealand dollar. Gabby's favorite pair. Although she is not with us today, I don't believe. All right. New Zealand dollar. Anybody got eyes on this pair? Last says had it on the radar for long. Yep, I'd be looking long as well as we trade within that zone, this zone. Interesting level though, because we do have slightly lower lows here as well, around 64.50s. So certainly be a little bit cautious with this pair. Let's go down to the 240. And I'll tell you what I would look for here. I would look for, before getting long, I would look, and this is higher time frame, of course, I would look for a violation of this level. A violation of this level and an expectation that we can go to this level. So what I would like to see for a reversal here is to see price action come up here. And we could create a head and shoulders. That could happen as well. But in general, no matter how it happens, a violation of this level. And if we can violate this level, I would anticipate a move higher to 65.80s. Now you can take that concept and you can wait for it on a swing trading time frame. You can use it from a day trading perspective. But that's my bigger time frame analysis on here. Wait for that. Wait to see if we get a violation of this level. We don't know how it would happen yet. Could be a head and shoulders. Could be a straight move. May not happen at all. But if we can get that, we can project a move up to 65.50s. As we go down to the lower time frames, we're probably going to see something in here as well that we can kind of take the same approach to, just like in a more micro view, of course. So let's go down to the 60. I was thinking of going back to the white charts, guys. And I was afraid my face would get blown off with brightness, but I was watching an old video of mine that came up and I had white charts on. I was like, man, those look clean. That boy looked clean. But then I also remember the massive amount of eye pain that I was in. But that was before I had blue light filters in my glasses, before I had a blue light filter on my monitor. So it's like, I don't know. Maybe that makes a difference. Maybe it doesn't. You guys always say you like the darker ones, though. Except for that one guy. There was that one guy. Pound yen looking, or pound Canada, keep an eye on it. Range bar charts looking to break lows. Looking to break lows. Again, we break these lows. That starts the rotation, right? Or that's a bad word to use. That starts the next part of your analysis. Lower low, lower close, retracement. Starts the process. Maybe that's a better way of saying it. What are you guys more? You guys are lighter dark charters. Darkies or lighties in this offensive world of ours? Can I say that? You like chocolate or vanilla? Light meat or dark meat? How else can we make it awkward? George, come on, George. Personally, I like dark charts, but for the live room, I prefer white because it's clear. I'm actually going to do a poll real quick, if you don't mind. I actually want to see some numbers on here. What is your chart type? Dark, light, and that should be it. Finish. All right, do me a favor, guys. You can answer this poll question. Remy says, I like my charts like my coffee. Black, strong, slightly bitter. I was taking this, YouTube sent me a survey the other day for survey for the creator groups. And, I was taking this survey because I take a lot of surveys because I understand the importance of it. Surveys are typically used to try and improve things. And at the end of this, end of the survey, I hate this question. It got me so mad. But it asked me, it wanted to ask me, what gender am I? That's what it wanted to ask me. But it had to word it in a way that, of course, said, what gender do you most, what was the question? Do you most relate to, or do you most identify yourself as? And I'm like, I'm like, only in 2019 do we have to phrase stuff like that now so we don't get offended. And I know that that's a touchy issue for many, but I have a hard. I mean, I try not to get involved in that because I don't really care. But I have a hard stance on that. I don't really care with what you identify as. It's what you are. You can identify whatever you want. I don't care about that. But you are one or the other, or in some cases both. And typically, that's chosen for you at a very young age. But I hate that stuff, man. It's like I don't I don't think you should have. I mean, you can have the choice to do whatever you want, of course. But like, here's the way I see it. I can tell myself if I want to tell myself that I identify as a woman, am I not going to get in trouble when I walk into a woman's bathroom and whip it out? Is that going to stop me from going to jail? It's cool, ladies. It's cool. I'm one of you. In my stance, yeah. Like, come on, man. Yeah, is my Kia now a Mercedes? No, it's still a Mercedes. You know, in your mind, you can think or it's still a Kia. You can think it's a Mercedes all you want. I don't get that. I think there needs to be another way. You can, it's gender is one or the other, or again, in some cases both. Very rare cases both. Maybe there's another way of like you can. It should be a separate question. Well, what is your gender, and then what do you want to be? I don't know. I don't get it. A friend reached out to me after seeing it, and she's like, "I hate that too." She was recently in she was taking a poll out in I think it was London, and one of the questions it was what's your ethnicity, and one of them was Black British. It was like it was weird, like she didn't know how to respond to it. It was like I don't know what the choices were, but she was like, it said Black British. She's like, is that like, should I do that or just a regular black, or like she's also mixed, so it's like she didn't know what to do, and she was confused. She's like, mixed, because she's always identified as both. And is that over there too? Latch says, do they say white other? And that's another thing as well, where it's like, all right, I think you either need to make it one or the other, or have all of the options open, right? Because, all right, black or white, white, or I don't even know. It sounds offensive if you do another color, but like just because you're white, I mean, there's so much in you, right? You can be white American, you could be white British, white Russian. I mean, it could. How about we just put like American, British, French? Like, how about we just do that? I don't know. These things weird me out. Yeah, alien, human. Are you human? Human, robot, alien. Those should be the three choices from now on. Human, robot, alien. But then you got people that are considered aliens if they don't have the right identification. If you're illegally living here in the U.S., you're considered an illegal alien. So I mean, does that count as well? Coffee drinker, coffee or tea? Yeah, and that's what I mean. Yeah, and that's what she confused her, because British isn't an ethnicity. So she's like Black British, Caribbean, African American, Black. Indian, we're all mixed with a whole bunch of stuff. I like the human, robot, alien. I think that should be it. Those should be the three choices. Brings us back all together. Anyway, 48% of you guys like it dark. 17% like it light. That number doesn't add up to 100 at all. Yeah, the no votes. You black British and you no voting. You no voting black British, white British, Indian British, mixed race British. You guys and your no votes. All right. Is the screen back up on your chart yet, guys, or not? You guys see the screen yet? Nope, not yet. Okay, let me. I don't know how to get back to it. Let's go to whiteboard first, and then we'll kind of reload and go. Share your screen. This world is so crazy, man. Everyone's walking on eggshells. You got to get back to just having fun. I try to be with my track girls. I try to be as racially awkward as possible. I think it makes the world a better place when you can have fun with stereotypes and it's all good instead of people just being so offended by everything. Breaks those comfort bubbles. Be goofy. We're all the same people, man. We just come from different places. We're all the same. So, I love it. Freshmen come in, they have no idea how to react. People that meet me for the first time, they're like, "Is it weird? Like, can you talk? Can you say that?" Then they adapt and they become better human beings. Yeah, I love it. That's my favorite part of coaching is watching people grow. Watching people grow in many different ways. All right, so New Zealand dollar, yeah. We're going to the lower time frames here on New Zealand dollar, looking for a potential reversal. So again, the main level right here we want to see is this. But perhaps if we go down to a lower time frame, we may see a smaller level that can be broken. You have a head and shoulders pattern setting up here. Just not going to be a lot of room for follow through because you have a level of structure right above it. But I would say this, lower time frame wise, right? So if we can break this level on the lower time frame, right above 65.15s, that can set us up, right? That can set us up for a move higher to that higher level. So that may be a move worth looking for if you get an intraday opportunity here. Looking for a break of, again, 65.15s. And then looking for a push back up to 65.30, 65.45. That can be an opportunity on New Zealand dollar. So not bad. Let's just look at that. On a range bar chart, really, really quick. Nice hourly candle on the dollar yen, by the way. Yeah, in a range bar chart, you can kind of see the same thing. To break at that level. Questions on Kiwi? Not a bad trading opportunity. Strike it through. No questions today. Good. Let's go Canada yen. I've got reversal written down on there as well. Canada yen. So 129. Let's see what Canada yen has to offer. Probably a different story than when I looked at it this morning since we had that Canada news. And by the way, I just want to check and read up on that real quick. I hope you guys don't mind, but this is my live room. And I can do what I want. China foreign minister, some in U.S. trying to hinder China's development. Dollar Swiss tumbles as sellers take charge today. Here, I love these headlines, man. It mean nothing to me, but I cracks me up to read technical analysis like on sites. The dollar Swiss has seen more selling today after a ceiling area at the 101.19 level. The inability to move above that ceiling turned buyers into sellers. That selling was probably a typo. That selling is what intensified after price fell below the 100 and 200 hourly moving averages. and, this is in parentheses, and a trend line. Love it, love it, love it. All right. We can look at dollar Swiss. Canada retail sales, 1.1 versus 1.2 expected. Canada retail sales, Fed speak, oil data, FOMC minutes on the docket today. The Swiss is the strongest and the pound is the weakest. I looked at the Swiss this morning and there was nothing that happened. Fed Bullard says wouldn't rule out a rate cut later this year. Why would you say that, man? Why would you say that? All right, let's get back to the technicals. Oh yeah, I'm thinking. Yeah, I want to look at the dollar Swiss. Look at the few Swiss pairs. None of them made my cut. Lat says Euro Swiss has made a new low in the 60. All right, let me perhaps look at some Swiss pairs later then. All right, Canada yen. Very similar situation as the dollar yen. As we had this rotation in trend, we came down, we V-bottomed here on the daily, and now we're working our way back up. Basically a mirror image on the higher time frame as the dollar yen. Lower time frame, slightly different story. And what we're doing is we've come to that gap area. So we've basically come to the level in which we're projecting the dollar yen to go to. And we started consolidating at the highs. Now, again, you know how I feel about consolidating at the highs. I would expect a breakout. Now, the only issue I have here is because we're already at structure, where is this breakout likely to go to? That would be the concern of mine. Where could we break out to? I don't have a lot of confidence in any particular level because we're right at structure. So if you maybe pick 183s, but not a lot of confidence in where the breakout would go to. But once again, breakout traders, right? This is a sloppy version of a high and tight flag here, right? Look for a breakout above this level and an opportunity to continue higher. Again, the issue is where. So breakout traders, keep an eye on Canada yen. I don't think we need to dig too much deeper into this. But we're in a range. Ranges eventually break out. If you're a breakout trader, be prepared. Dollar, pound dollar, nope, retesting lows. Didn't get below lows yet. Okay. I want to see a break and close below those lows on the pound dollar. All right, let's go to let's go to pound Aussie real quick. Did you want to look at Euro Swiss, Latch? All right, let's go to pound Aussie then. I feel like today's the day I'm going to start Game of Thrones. I think today is the day. Start my one week trial. Binge it real quick. Cancel the trial before the bill comes in. Oh yeah. All right, pound Aussie. What are we doing here? Pound Aussie. What are we doing here? Not too much on the daily. It looks like we've already moved to the level I expected us to move to. So this trading opportunity, hey Chris, this trading opportunity may be done as well. Let me just keep an eye on some of these other range bar ones we were looking at. Not that pound Canada. New Zealand, Canada did get that retest back up to 87. So if you guys are looking for that trend continuation trade, we didn't have the break and close below 87 evens. We did retest the 87s. We did get that lower low, lower close there. So if you're looking for an aggressive trend continuation opportunity, you've got it right here. That was the entry. Going back to New Zealand, Canada. All right, let's go down on pound Aussie here. This actually doesn't really interest me too much. Similar situation to pound yen, where we traded that lower level of structure. We had the brief spike above it in the retest. However, why do you think I'm not too interested in looking for a breakout to the downside on this pair versus what we saw in the pound yen? What is the difference here? Yeah, we're right at previous structure support. So it's like once we break out, where are we going to break out to? We're already there. Yeah. So I don't know what I saw in this morning that caused me to put it on my watch list, but it doesn't look too appetizing. All right. So here's pound yen on the 60. Again, basically an identical situation. Again, now, if you're a counter trend trader, you can look to buy right here. You can look to buy right here. Nice head and shoulders, by the way. You can look to buy right here. But again, just keep in mind we do have that lower level of support. So understand that your stops will probably not be in the best location. Yeah, I thought the same thing this morning, Latch. I said, beautiful head and shoulders. Kind of random. Kind of random, but beautiful head and shoulders. That was the news release, base head and shoulders. And like it's not really an inverted head and shoulders, but it's not really a normal head and shoulders either. It's kind of just like it's like someone wanted to do a chart example and just stuck it on their chart. Like, here, just throw this on here to make it look good, so I can take a screenshot of it. But I thought the same exact thing. I said, man, look at that head and shoulders. I'm like, well, it's not really a head and shoulders bottom, because then this should be, or inverse one, because this should be the shoulder down here. But it's not really a head and shoulders top, because it didn't really come at the end of a bearish trend or a bullish trend. We came at the end of a bearish trend. And all I can think of is that news does funny things. News does funny things. But yeah, it was kind of random this morning. I was looking for a perfectly symmetrical one, so someone developed one for me. There we go. Those market manipulators. Those brokers manipulating the markets. I sent out that funny post last night on Instagram, if you guys saw it, about the how new brokers see traders, or how brokers see new traders, and the button was like donate. And I got an interesting, it was a good comment, but it was a guy who was like, I don't want to write a book, and then he proceeded to write a book, talking about market manipulation and stuff like that. And it's like, I don't know. I don't believe in your broker personally attacking you. I don't think we're that important. I believe in brokers knowing what dumb traders do. Not dumb traders, but knowing what rookie traders do. I believe in brokers. Yeah, I believe in brokers saying, okay, well, if 90% of traders lose 90% of their money in the first 90 days, then I'm going to take a position that is opposite to what the majority of new traders are doing. I believe in that. But that's not, in my opinion, that's not manipulation. That's not your broker hunting you out personally. It's just you're in a category of new trader. And once you get out of that category of new trader and you're consistently profitable trader, then your broker will start following what you're doing, if that's the case. But I've always believed that's an excuse. And the guy started talking about spreads, and it's not fair that, brokers charge spreads and commission where, institutional traders, their spreads are a lot less than ours. And I didn't answer that part, but if first of all, spreads and commissions are the cost of doing business. You guys understand that, right? Like, that's the cost. Like, brokers aren't here to make our lives easier. They're here to make money, right? They're the middleman. That's like George saying, "Hey, Akil, I've got this car I want to sell. Do you mind driving it, 4 hours away to the person so you can buy it, and then get the money from that person and drive all the way back?" Yeah, I want a fee. I'm not doing that for free. Like, yeah, you have to give me gas money and some money for doing it. I don't have the money to set up an ECN, so it's my only option. That stuff is expensive. What, to go with an ECN broker? saying for the brokers. And the other thing is like, well, you can't compare it to institutional trading because, okay, the more money you have in your account, the smaller spread you can command, right? The smaller spread you can command, the more money you have, right? That's not an unfair advantage. That's business, right? That's business. But look at it from a broker's perspective. If someone is coming in with hundreds of thousands of dollars and they're trading with a much smaller spread, guess what you're still making? Guess what the broker's still making? They're still making a commission fee, but that's part of the business. They want that service, right? If you have a $500,000 account, right? And you have a choice between a broker that gives you a 0.01 pip spread versus a 2 pip spread. Who are you choosing for your money? Yeah, the one with the smaller spread. That's just doing business. It's no different from going to the store, right? You have two stores that sell the same thing and one's selling it cheaper than the other. Right? If they want your business, they probably got to lower their prices. So I get sick of the complaints. And there are shady brokers out there doing shady things. Don't get me wrong. But I also believe it's your choice or it's your duty to put yourself in a position not to get caught up in most of that shadiness. Don't go with a reputable broker. And yes, reputable brokers, they do things sometimes. Yes, and that's part of the game. But don't go with, there's a less chance of that happening than going with backalley.broker.com. Someone like that. I hope that's not a real thing. But just put yourself in the right situation. But I've always taken the stance that your broker doesn't care about you personally. That you and your small account isn't important enough for your broker to be sitting back and for them to waste the time and manpower watching every single thing that you personally do just so that they can manipulate you. Your broker just wants you to trade. That's what they want you to do. But then there's the whole thing, and I don't know how true this is. This is the second person I heard it from. Maybe it's the same person. But he was talking about there's a big scam that educators are out there and educators are working for the broker and they're purposely teaching traders to do the bad thing, that way, do the wrong things, that way their broker can take advantage of it. Now, this is the second time I've heard it within a week, so maybe that is true. Maybe that's a true thing. I don't necessarily pay attention to any other educators out there. Tony says that's a true thing. So what are the educators teaching? Again, the first time I heard it, I was like, no, wait, that can't happen. And then when I heard it again today, I'm like, well, two people said it. Maybe it is happening. Are they just teaching you to put stop losses in bad places, and then they get a fee from the broker? Has anyone experienced it? Has anyone experienced it? Or has someone knows someone that has firsthand experienced it? Because we can hear all we want, but we also hear a lot of things. I've always heard that brokers can see my stop losses. If I use a stop loss, they're going to take me out of it. Yeah, the assumption of what I'm on is that they are recommending brokers. So like if I were doing it, I would have a back end affiliate deal with. I'd be working with a broker. Let's say Axe Broker. Actually, I'm looking at my Axe deodorant. Axe Broker, and I work for Axe Broker, and my guess is that the broker pays me to teach my students. Obviously, I educate students, and I would put them to. I would give them to the broker. So I'll say, hey, I have this deal for broker. When you trade with me, you get a free account with Axe Broker, right? And you flood people in there. And I'm guessing what they're saying is that the broker tells me to teach traders the wrong things. So I'm like, hey guys, put your stop right at this level. That way the broker can trade against them and benefit? Is that what you guys are saying? Because that part doesn't make sense. I think traders will fail at a good enough rate on their own. Now, to take more trades, I've heard that before. Now, that makes sense. That does happen. Where you get your traders onto this system. A lot of times you see with mechanics, they a fake high frequency mechanical system where you bring the traders in and you get them to trade as much as they can, because when they trade as much as they can, the broker collects commission. Now that I believe in. That I believe in 100%. I feel like it would be weird for someone to falsely educate someone to, like, how do you even teach someone how to be bad in the market? Like, I don't, you guys with me on that? Like, is it just the second one that I mentioned about, hey, trade this system, take as many trades as you can. That way my broker can take, 90% of your money in 90 days. Or is it the actually, hey, I'm teaching you how to trade the wrong way so that the broker can hunt your orders and make money? That way seems a little suspect. Because I bet if you teach traders to trade the wrong way, they'll probably be profitable. But that way sounds okay. Okay, so the first one makes sense then. Yes. The second one's a little bit, the second one seems a little bit, that seems like a conspiracy theory. But the first one makes sense. That does make sense, because you're just running, you're printing money through the machine. I mean, the brokers get paid off of your transaction costs. So flood as many traders my way as possible. Have them take as many trades as possible. I take all their commission fees. They're going to go broke anyway. Let's make that process quicker. Spit them up, chew them out, get to the next one. That makes sense. That one makes sense. The first one, that's a little bit iffy. But again, yeah, you guys almost sold me on it. I feel like it would be easier to teach the right way than teach the bad way. And here's another reason why I wouldn't believe it, because even if, like, here's the thing, right? So once I've always heard this. I've always heard that the brokers will identify you as being good or bad. And once you become good, then you actually get on the side where they start following your orders. So, like, it's not a disservice for the it's not a disservice for you to get good, because not only if the broker is trading, right, they can trade with your ideas, but also if you get good, you make more money. If you make more money, you trade a bigger position size. You trade a bigger position size, they get more commission off of you. So I feel like that would benefit the broker. Yeah, grow your account as big as possible and keep trading. I can keep getting commission. So that's why I don't recommend brokers. I don't want to get caught in any of that. If you go to an educator and you need to know more about them, ask him to show you his IB agreement with XYZ broker. Yeah. But I would tell you this, it's got to be tough though. I mean, as someone, if you were someone just getting into the education business, and that is your way of growing your trading into a business, and like I get a broker that reaches out to me basically at least once a week, a couple times a week, offering money and all this other stuff. Even if it's just like no agreement, but just like, hey, can you plug me on YouTube real quick and I'll give you whatever $1,000, right? That's got to be tempting as a newer trader and trading educator looking to grow your business. And businesses take a while to develop. You're starting off slow, and someone's throwing money at you. It's got to be tough not to kind of stick to your guns and be like, nope, I'm not going to take your money. That's tough. That's got to be tough, right? And of course, there are people out there that have those agreements that aren't doing the shady things, that are actually educating and just have a deal for broker because they know, like, you've got a big following and you can recommend people my way. But yeah, but I guess there are people out there that I don't see them as much anymore. But the Magic System salesmen and stuff like that. Man, the world we live in, guys. The world we live in. Sheesh. Now you see why we don't recommend brokers. Now you see why I take such a hard stance and not doing any of that stuff. I don't want any affiliation with anyone. Tony says, "Hi guys, my name is Tony and I teach forex and I recommend this broker. I also recommend you use the 1 minute chart and take 10 trades a day. Only 10? Well, then you know what happens after that, Tony. Once they identify you as a failing trader, then you get that email. Hey, would you like us to manage your investments for you? Here's a look at our investment portfolio. How about stop losing money, stop bleeding your money out and send us your money and start investing with us. And then now they grow their account management fee. Wow, what a world we live in. All right, let's get to our next pair now. Let's get to our next pair. Once you're on the list, and then you sell the list and make money off the list, right? That's the next thing. That reminds me, this trader will go nameless, but there was someone that approached me before we started Tier One, um, who wanted to work with me, and they were bragging about this massive list. Darren remembers this. He's like, man, you got to team up with me. I got this massive list. It's going to be incredible. It was a dirty list, man. A dirty list. Dirty list. It was burnt out and washed up. I forwarded it to Darren. I'm like, Darren, check out this list. He said, I know that list. He said, that's garbage. A list of like refer like emails. Right, as a business owner, your job is to grow your list, and then because those are your potential clients. So like a lot of people sell lists. So like say we don't do it, but like say someone reached out. Say we were unethical, right? And someone reached out to us and said, hey Akil, I know you guys at Tier One have a good list of traders. How much does it cost for you to share your list with us? And they pay you money, you give them your list, and that's why you ever notice when you sign up for one thing, you start getting emails from like this other thing, and you're like, how did they get my email? People are selling lists back and forth. Leads, basically. Yeah. So we don't do that. But a lot of times you get this recycled list. So you'll get this list of people that have been selling these lists over and over again, and these clients are like all washed up because they've been getting hammered with emails for like 30 years, and they don't care anymore. And then you have this big list where someone tells you like, hey, I got this million person list, but you only have like 100 people on there that are actually hot leads. So the key is you want to have an engaged list, right? For me, it's quality over quantity. Same thing with like followers and stuff on social media. You want to have an engaged list. I'd rather have a list of, and emails are down in these ages, obviously, but I'd rather have a list of 1,000 people and have a 50% click rate and open rate on my emails, right? Than have a list of 10,000 with like a 1% open rate. Probably too big of a number, but instead of like a 20,000 with a 2% open rate. So you want people that are actually engaged with what you're doing, because what's the point of having a potential client, right? A list that you're trying to sell someone to that they're not interested in. You just have because it looks better, I guess, right? Looks better. All right, New Zealand, Canada didn't quite do the lower close. We're getting there. All right, let's go to another pair. Let's go. I got Aussie Canada and oil. Let's go Aussie Canada first, and we'll head over to oil, and then we'll be just about done for the day. George says I use my fake accounts. Yeah, man. Yeah, the game is interesting, man. I don't, I don't know. I don't like it. It's so shady out there, but be ethical. That's all you can do. Be ethical. Don't sell your list. Avoid the temptations. For you guys that are going into business, avoid the temptations of the quick, easy money, right? Surpass the quick, easy money for the longer term money. You can ask Jason Greystone this too. I mean, it's you get money thrown at you every day, and it's sometimes it's tough to say no, because like the unethical side of you is like I had people before ask me, it was like, hey, just run a signal service. I don't really care if it wins or loses. I'm just gonna give you, I think it was like $10 for every trading signal you put out. And like the unethical side of you is like, all right, I'm just gonna put out 100 trading signals a day, like just random stuff, and just collect money. Then it's like, well, that would just ruin your reputation. So the bigger picture, it would fail you horribly. But a lot of people give into that type of stuff for the quick buck, and then they're ruined, and they're burnt out. You know, look at people like I don't know if this is true or not. I've heard rumors about what is it, iMarket Lives or LML, IML? Is that the same thing? I don't know. I've heard people have told me about this before. Is that a thing? LML, IML. They were doing Astro Forex. They were one thing, then they changed to another thing. And again, I don't know if they're legit or not. I have no idea. So I'm not. This is just what I've heard from people. So I have no clue. But I think I've heard with them where they were one thing, and then they went to another thing. They burnt their bridges and went to another thing, and it's like you ruin your reputation. The millionaire trader, is that another thing, Charlie? The millionaire trader. Tough out there. All right, Aussie Canada trading at previous structure. Oh, the guy on YouTube. Is that one of those guys where they come up and they're all aggressive? They got that awesome music in the background. They're like walking. Hey, my name's Bob Johnson. I'm an options trader. Cut to a different view. Yeah, and I make $1 million in the market every day, and I'm going to show you my secret method on how to. One of them had Terrell Owens in the background. I see him all the time on my on my YouTube ads. What I should do, we should make a spoof of that. We should make a spoof of them. Nothing here on Aussie Canada. We're going to go to oil real quick and end our day. We should make a spoof of that. We're like, we do this whole we do this whole thing, big yacht, big boat, everything, gold chains and the whole thing, get like a pet tiger or something like that. And then like show like the after scenes, or we got the guy comes up like, hey, I'm gonna need that back now. And then we go home in like a beat up like 1985 Honda Civic. Hey man, can I borrow borrow a couple bucks for gas? Eating like that'd be great. Like, okay guys, that's a wrap. The guy comes up right away. Hey, I need that back. Hey, can you edit out that Enterprise sticker on the back? All right, thank you. Yeah. Fun stuff. Someone got caught like that. I remember hearing it. There's people on YouTube that basically all they do is they watch these like scammy people and they pick them out. And there was a guy I remember that he zoomed in and he saw like he got the license plate on one of the cars in this guy's video and just, I guess, did a search on it, and it ended up being a rental car. And they did research, and like his fiance works at like Enterprise, and that she was just getting him the rental cars for the things, and it was, yeah. It's like, man, just take all that energy and be honest. Just tell your story. Be like, hey, I'm an aspiring trader. I haven't made it yet, but I'm trying. People will relate to that much more, I guess. But, well, maybe not. Maybe not the people they want. All right. Not too much on oil. I thought we were getting a break here, but we're retracing that right now. Any other pairs you guys want to take a look at? I do want to take a look at the dollar Swiss real quick. Yeah, that's what I mean. Yeah, I keep thinking, George, like we don't think like normal people. Like we think about doing things the right way. People aren't thinking like this, so that's why it seems weird. Real quick with the pound dollar, we get a break and close below this level right here. I'm going to be able to reduce those stops, right? So stop losses are up here, right? We get a break and close below here. I'd really love to see a break and close below this level, which it may be the same candle. Here's a cool trick on the range bar charts, guys. If we go lower, I know exactly where this candle's going to close at. How is that? How do I know exactly where this candle's going to close at? Yeah, because it has to be a range of 5. Yeah. So it would be right at that level. But what I can do is if we get a break and close below that level, that's going to allow me to reduce my risk, right? Right now my risk is 126.60 to 126.90. So basically 30 pips of risk, right? If you guys remember the example we did earlier, so this will kind of fit right into it, right? I will be able to reduce this to about 126.67. So where I had 30 pips of potential risk before, didn't want to do that, I will have 7 pips of potential risk. Not bad, right? Now again, pros and cons of actively managing your stops, right? You considerably reduce the breathing room that your trade has, but you can reduce that risk as the market's going down, and then save your bacon on the back end. And eventually, what that does is this: you start off with a risk reward that looks like this, right? We talked about, was it a 2.5 to 1, something like that? And that risk reward, oh, no, stay there. That risk becomes this. And you don't need to hit on all of these. As you guys can see, you don't need to hit on all of these. You just need to hit on a few. And this is the same concept. I haven't done any this year. This is the same concept with the home run trades. If you guys are new, you haven't heard me talk about it because I haven't had any this year. But typically my trading style goes like this, right? I showed you guys my equity curve in Monday's session, right? But, right? You guys would agree, right? This is what my equity curve typically looks like, right? It's slow, it's steady, it's boring, right? And then about 3 times a year, I get a home run trade. And what do you think that home run trade does to my equity curve? Boom! And then what do we do after that? We go right back into the boring. And then again, at some point again, boom! Right? And we go back to it. That's typically how my equity curve looks. Now again, this year I haven't had that, right? That's one of the reasons I'm performing lower than I'm used to. And it's also, again, the volatility in the market or lack thereof. But this is the same concept with the home run trades where you go for it. You get that big win. It doesn't happen all the time, right? I said I hit on about 3 of them a year. I'll probably take maybe 6 to 10, maybe 10, maybe a reach, maybe 6 to 10 a year. So a lot of them you don't hit on, and when I say hit, I mean the big target. A lot of them end up where it's like, some of them are stopped out right away because you just lose, trades lose. Others you hit like an initial target. You hit an initial target, and then guess what never gets hit? Again, if you're looking at minor levels here, 127 extension, this is your first minor level. 1618, this is your second minor level. So keep an eye on those levels if you guys are in the trade. Yeah, but a lot of times it goes down, it hits your first target, and never gets your second one. So you get a good trade out of it, but you don't get that home run. So we'll see, but good signs here on pound dollar. I'll continue to manage this as the day goes on. But this was a pretty cool trade. It was good. Do you ever consider splitting your trades? Yes, I do. Not on this particular case, but I typically split them up into two targets. Yep, a target one and a target two. Not in this particular case though. But 99% of my trades are target ones, target twos, unless it's a scenario where I make a major adjustment to my trading plan, which has happened before. 2014 was the last time I did that, where the back half of 2014 I stopped taking target twos and only took target ones. But yeah, I'll typically split them into two positions. I'll take half off at a very conservative target, move stops to break even, reduce all my risk, and look to get the second half off at an extended level. Yep. All right. Any other questions before we shut things down for today? Lots of analysis. Euro, pound, pound, dollar, New Zealand, Canada, dollar, yen, pound, Canada, New Zealand, dollar, Canada, yen, pound, Aussie. And out of all of that, one trade taken. And we didn't even look at some of the majors. Euro, dollar is not doing anything. So kind of avoided the pairs that didn't really have anything on the radar. All right. Well, I'll get this recording up to you later in the day. I'll probably be hanging out on the platform right after this room. I'll take a little Pomodoro break, and then I'll come back and be on the platform. So if you guys have any questions or want to get in contact with me, I'll be over there. And I'll see you guys tomorrow. Until then, plan your trade. Trade your plan. See you.